Wagwan guys, and this for here. So I'm going to be your instructor on today's video. Alright, so this channel is going to be all about the financial markets. Right in this channel we are going to be talking about everything forex, crypto, indices, synthetics, and stock markets. Right, but in today's video we'll be talking about forex trading. So let's quickly look into the introduction of forex trading as a whole. But before that, we are going to look at our course outline on what we'll be talking about right in this video. Right, so we have our course outline here. So we'll be talking about what takes forex, what is traded on forex, who is a forex broker, trading times and trading sessions, terminologies used in forex trading, currency pairs, and we are going to be wrapping all this all together. Right, so you might be wanting to ask, what is forex? Right, so forex is one of the largest financial market in the world, and it will benefit everyone if you learn how to trade it, right, both you and I. So forex is a short form for foreign exchange. So whenever you hear forex, know that in full it means foreign exchange, right? So yeah, moving on, it involves the buying or selling of foreign currencies for profit. So what we do here in the forex market, we buy popular foreign currencies for profit. So this exercise is also known as trading the forex market. So what is trading on forex? So we trade major and minor currencies. So what are these currencies? We have the popular Great Britain pounds, also known as GBP. We trade the United States dollar, known as USD, euros, Japanese yen, known as JPY, Australian dollar, AUD. We also have Canadian dollar, CAD, and others too numerous to mention. So just know that we just trade the foreign currencies in forex market to make profit. Whether we are buying or we are selling, we just want to have a single goal, which is to make profit either ways. Right, so the forex market closes 10 p.m. on Friday and also opens 10 p.m. on Sunday, depending on your time zone. You can check what time is 10 p.m. at your zone. So in some cases, if you're from the West African side, you are going to use GMT +1, GMT +3 in line with this time. Take note, 10 p.m. UK time and 10 p.m. UK time also on the Sundays when it opens and closes. So the market is open for 5 days, Mondays to Friday, and opens on Sundays. Right, so who is a forex broker? So forex brokers, they are firms that gives you access to the foreign market. So they give both you and I access to the forex market because we are like petty traders, and they are the middlemen that gives us access to trade in line with the major market makers. So they provide you as a trader access to the financial market by providing you a trading account. So they do this by creating a sub account under their firm so that you can be able to use your little capital or use your capital to trade the forex market and get your share out of the market. All right, so without a forex broker, a retail trader like you and me can't have access to the foreign exchange market. So that is the work of the forex broker. They are just like platforms that connect both you and me to the financial market, so we can be able to trade the forex market and we make profit either by selling or buying. So they also provide support functions to the trader. This can be support functions can be how you can create your account, how you can fund your account, how you can verify, do your KYC and make withdrawals. Right, so we also have trading times and trading sessions. Right, so there are various trading times and trading sessions in the forex market. They include the Sydney session, the Asian session, the London session, Frankfurt session, New York session. So these sessions names are derived from the major cities in which most of these transactions are done. So for example, the Sydney session, it represents Australia and other countries that are around that time zone. Right, so the Asian session, also known as the Tokyo session, sometimes, right, represents Japan and other Asian countries around that zone. That is why it is called the Asian session. Never forget that. Right, so we also have the London session. We have the Frankfurt session, that's like Germany, it represents Europe, while the New York session represents the Americas, and the London also the Europe. All right, so moving on. So we have trading times. So each of these sessions have their own opening and closing time. That is why they are called closing time. They all have their times that they do open and do closes, these trading sessions. Right, so the Sydney sessions opens by 9 p.m. GMT, but if you're in your own locality, you can convert this time zone to your own time zone. So those that are in Nigeria, that's on GMT +1. So if this evening sessions open by 9 p.m. in your locality, it should be 10 p.m. if you're from West Africa, Nigeria, right? Then the Tokyo session, also known as the Asian session, opens by 11 p.m. GMT +1 in Nigeria, that's 12, that's a new day. While in the London session, it opens by 7 a.m. GMT. Frankfurt opens by 8 a.m. GMT, while the New York sessions opens by 1 p.m. right? So this is like a pictorial example of how these sections do open. They are in line, they come one after the other. It's just like after these sections opens, then another session takes over, while the previous session is still open, but the other session is still active. So you see from this picture right here, you see after the London, the New York, the Sydney and Tokyo and so on, every day, every given day, from Mondays to Fridays. So we also have the terminologies used in Forex trading. So when we say to go long, it means to buy. That's like if I want to buy a currency pair and someone says to go long, or I say to go long, what I mean here is to buy. So if I say to go short, this means to sell, right? So if a trader tells you that he went long on a currency pair, he meant that he bought that pair. So if you have a currency pair like GBP USD and I went long on that currency pair, that's to show that I bought that pair. That means it goes to the upside. So all what people are doing in Forex is just buying and selling, literally buying and selling, right? Yeah. So we also have the bullish market. So a bullish market is a market that is going upwards, or can be called uptrend. So whenever you spot a market or a currency pair going upwards, that's like moving in an uptrend. That's a bullish market. So if I say something is bullish, that means something is going up, be it any kind of foreign currencies that you're trading. All right. So we also have the bearish market. This is like the opposite of bullish market. It is a market that is going downwards, or can be called a downtrend. So we have the bulls. The bulls in this case, these are buyers. The buyers are referred to as the bulls here. Those people buying a currency pair are the bulls. So bears will be the opposite, the sellers. They are referred as the bears. So we also have ranging, also known as ranging market. It is a market that is said to be ranging. It is not going up, nor going down. It does not have a clear direction. It is just moving sideways. It is not going up, it is not going down. It is just moving in on a horizontal position. So you cannot clearly see the movement when the market is ranging. So people tend to avoid the ranging market. Right, yeah. So we have the trending market, or just trending. So it means that a market that has a direction, as the name implies, trending. It is either moving upwards or downwards. So if I said uptrend, it is moving up. If I said downwards, like downtrend, it is trending down. But when it's ranging, it is not going up, neither is it going down. So if the market is just ranging, it means that the market has not found any clear direction. Right. So we also have hawkish. This term is mostly used when referring to the central bank, governor, or personnel of a country. Yeah. So when they are hawkish, they tend to be liberal on interest rate, and this is unprofitable for those of using that currency, or you're trading that particular currency pair. So this can influence the interest rate on a particular currency pair. So this is good news for investors, right? So we have dovish. Dovish, this is the opposite of hawkish. It is also a financial personnel who are dovish are very restrictive. They do not want the interest of their currency pair, so they tamper with that interest rate, and this is bad. Yeah, so they will even want to reduce it. So this is bad news for investors. So we also have NFP. So NFP is an acronym. So this acronym in full simply means non-farm payroll. It is a very important news event in the US. Also, most of these currency pairs have their specific names in which they are called. Example, dollar is sometimes called greenback, the pound is called the cable, while the New Zealand dollar is called kiwi. The Australian dollars is the Aussie, the Canadian dollars is the loonie, oil is referred to as black gold, and so on. So that would be this on terminologies in the Forex market. So lastly, we are talking about the currency pairs, right? So why are they called currency pairs? They are called currency pairs because they are in pairs. You cannot just buy only euro just like that. They are called currency pairs because they are in pairs. So you can see that they are in pairs like this. You can see EU euro and USD on the same line. That's like euro USD. You can see USD card. You can see euro GPP card, euro card, euro NZD, GPP NZD USD NZD card. So this is what we mean by currency pairs because they are in pairs. So if you want to buy GBP/USD, you're buying this pair. All right, so that's like to go long on GBP/USD. If you want to go short, that's to sell. That means you're selling GBP/USD. So if you check at the corner, like the first currency is known as the base currency, while the currency at the right hand side is also known as the quote currency. So this is like GBP, which is at the left hand side, is known as the base, while USD at the right hand side is known as the quote currency. So what this means that to get 1 GBP, you'll be needing 1.3469 USD to get 1 GBP. Why? Because GBP is on the base, so the base is always, or in most cases, stronger than the quote currency. You all know that normally in real life GBP is stronger than USD, even Euro is stronger than USD, but there are some few exceptions where the quote can be stronger, which means instead of you to buy Euro USD, you'll be selling the Euro USD, because while USD is strong in this case due to fundamental or technical analysis. So, but they'll take note that the base currency is always stronger than the quote currency, unless on some few exceptions. I've already listed the exception. The exception is when there is something backing up the quote currency to make it stronger than the base currency. So that is it on currency pairs. So all these here are paired together and are known as currency pairs. You can see GBP USD, Euro USD, USD card, and Euro GBP. So if I want to buy GBP card, that's like I'm going long on GBP card, I'm buying GBP card, meaning that I'm selling card. So if I'm selling GBP card, it means I am selling card and buying GBP. All right, so that's it on currency pairs.
Trading Forex on margin carries high level of risk and may not be suitable for everyone. Past performance is not indicative of future results. The high degree of leverage can work for you or against you. Trade with caution and wisely.